Hey everyone, Ben here. Investing and social media. These two have become intertwined, especially this past year. From the Reddit short squeeze of GameStop, which even resulted in a YouTuber named Roaring Kitty testifying at Congress, to Twitter feeds, Facebook posts, and even YouTube videos, all contributing to the momentum of stock prices. Then you have investment firms like ARK Invest and Cathie Wood, which have took full advantage of this viral investing phenomenon. Now, I personally was arguably one of the first YouTubers to actually cover ARK Invest ETFs, and that was because I saw that they had some major potential, but this was before they became world famous, mainly thanks to their selection of popular growth stocks such as Tesla, Square, and many, many more. But on many interviews, their founder Cathie Wood actually states a large portion of their success, the inflows which her ETF has received, the billions of dollars, which has resulted in ARK Invest ETF becoming one of the biggest and fastest growing ETFs on this entire planet. She stated a large benefit of that has come from social media. But this video is not about ARK Invest. This video is about the momentum on stock prices caused by social media and the internet. And in this video, I'm going to be reviewing a brand new ETF called the Buzz Index. So this ETF basically listens to the entire internet, from Twitter to Reddit to blog posts to even YouTube videos, in order to find the most talked about stocks. And from those data points, the company uses algorithms and artificial intelligence in order to decipher the internet chatter and actually select a bunch of stocks with the most positive investor sentiment on the internet right now. Now, this may sound like complete rubbish. How can this actually work? How can this actually outperform the general market index? Well, surprisingly, this ETF has actually outperformed the market this year by over 67%. So it's definitely worth us diving into in this video. So be sure to stick around to the end of this video, guys, and I've also got a very special surprise for you guys. So be sure to stick around for that. And if you're new around here, feel free to join the investing family by hitting that subscribe button and turning that notification bell on. If you do find any value in these videos, please give this video a big thumbs up. That helps out tremendously with the channel. If you do want to know exactly which stocks I'm personally buying, selling in real time, and access my entire portfolio, and join a thriving community of some of the finest people on the internet, then feel free to check out that first link in the description below for the VIP membership group. And with that being said, let's dive in. This is their intro here. So what people are saying about stocks matters more than ever. Our algorithms are always on, analyzing the stocks with the most positive investor sentiment to stay one step ahead of the market. So invest with Buzz. The ticker symbol on the New York Stock Exchange, BUZZ. So social media and mobile technology have fundamentally changed the way we engage with stocks. There's a ton of online chatter every day, changing sentiment, and our collective views clearly impact their value. With Buzz, we use artificial intelligence to monitor 15 million online posts a month to measure which stocks have the most positive investor sentiment. Then we rank the top 75 stocks each month to feature in the Buzz Next Generation AI US Sentiment Leaders Index. 1 year returns of this ETF are up 67%. Now, the first question which needs to be asked is, of course, that's an incredible return, but is this sustainable over time? We know 2020 has been a very unique, special year, especially for stocks. There's been a real sort of influx of new investors, especially Robinhood investors, free trader investors. Everybody's been online, everybody's been talking about stocks. So can they continue that performance in the years to come? So I think it's definitely one to watch. If they can, then that should be extremely interesting. Now, one of the main partners of the social sentiment ETF is the hilarious and ostentatious Mr. David Portnoy, who is the founder of Barstool Sports. So Barstool Sports is basically like an online fantasy sport website, but this guy's become incredibly popular, and according to his Wikipedia page, he's classed as an internet celebrity. So this guy's a multimillionaire, and of course, during the whole global lockdown, he decided to take up day trading to show everybody how easy it was. So he's famous for actually popularizing the famous stocks only go up meme.
It's a little bit down right now, the market. Fine. You know what we say at DDGG Global? Stocks only go up. And anytime you think they're going down, they're going back up.
And he's also been quoted to have stated when he was making major gains in the market, he's much better than Warren Buffett. He's the new age and new generation of investor. Of course, this was done in a tongue-in-cheek way. I don't believe he actually believes he's a better investor than the great Warren Buffett, but still, he's very interesting. He's a very hilarious guy, definitely interesting guy to watch. And Portnoy's actually done a hilarious promotional video for the social sentiment ETF. So I'll just play you a brief clip.
With Buzz, when you invest in BUZZ, the money that you're putting in is then redistributed across the top 75 most favorably talked about stocks according to our algorithm. Does it work?
Last year, Buzz Index beat the S&P by 40%. Now, is it some ritzy glitzy trying to get 100% gains? No. This is just the best of the best. It measures positive sentiment for the course of a month. The top 75 big cap, $5 billion stocks go into it, constantly rotating based on the most positive sentiment, not only from me, from everybody on the internet.
But yeah, now let's dive into the top holdings. So these are the most talked about stocks on the internet right now. So we've got Ford Motor Co. So that's quite an interesting one to see. 3.4% of the ETF. We've got DraftKings, 3.31%. Twitter, 3.3%. Facebook, American Airlines, Amazon, Apple, Netflix, Tesla, Microsoft, Boeing, Plug Power, Walt Disney. Now, a lot of these are fantastic companies. We've got Penn National Gaming, which I believe actually invested into David Portnoy's Barstool Sports, so it's interesting to see that stock in there. We've got Pinterest, Virgin Galactic, Zoom, Snap, Intel, Square. So a lot of these are fantastic companies. Etsy, Teladoc, a lot of these I'm actually invested into. They're actually fantastic companies. Qualcomm, that's a great play on 5G. Nikola, they've had a lot of controversy, to be honest, Nikola. Salesforce, Barrick Gold. Now, Barrick Gold was a stock Warren Buffett invested into. That was talked about all over the internet. I did a lot of videos on that stock. So maybe that's why that stock's in this fund at the moment. We've got Caterpillar, Etsy. We've got Fastly. So that's also a great one at the moment. Cloudflare, Chewy. So that's also a great stock. Beyond Meat. So there's some fantastic companies in here. So traders generally look at short-term price momentum. They're basically looking at what everybody else is doing. Now, there's an old quote and basically said, the stock market in the short term is like a beauty contest, but you're not picking which person you think is the most beautiful. You're picking who you think everybody else thinks is the most beautiful. So really, that's the way this sort of works in the short term. So it can be great for traders, especially in the short term. Now, I personally am more of a fundamental investor. I like to invest into businesses, not stocks. So I really like to evaluate the fundamentals of the business, the cash flows, the growth potential, the margins. I really like to dive deep into the balance sheet, the financial data of the company. But in the short term, sentiment does play a huge role in investing returns. This is actually backed up by an interesting report by a finance professor. So he basically stated social media can influence stock returns, finance professor says. So this is Alexander Kurov, and he studied Twitter's effect on the stock market. So he basically said firm-level Twitter content has information useful for predicting next day stock returns, and it is a stronger predictor of return to firms with less analyst coverage. He goes on to say academic research in finance generally shows that investor sentiment tends to be driven by investor beliefs or feelings not justified by fundamentals, such as the facts and rational expectations that should determine the value of a stock. Now, we saw this with GameStop, of course. GameStop's a terrible business. Since everybody buys games online, there's a fundamental reason that business is declining and the stock price has declined over time. But in the short term, due to a lot of bullish momentum from the internet, the stock actually reached some incredible highs. But of course, a lot of people also lost a lot of money on that stock by investing just off momentum and trying to actually predict what the madness of crowds can actually do. Now, I did promise you guys a very special treat at the end of this video. So what I've done is I've got the top 5 stocks from the social sentiment, this Buzz ETF. I've got the top 5 stocks. I've plugged them into Stockopedia. So this is a stock research platform I use to analyze stocks. And basically what I've done is analyze the stocks in terms of their fundamentals and also their short-term price momentum to come up with the best one to potentially invest into. We can see the outright winner here is Ford. It beats out DraftKings, Twitter, Facebook, Amazon. And this has an overall momentum rank. So this is a short-term indicator, the momentum, the bullish momentum, the technicals of the stock is 99, quality is 55, value 72, and stock rank is 87. Now, I personally believe this is because of Ford's brand new electric Mustang, which is sold out across many places. So diving into this article here on NBC, so the first edition electric Mustang is all sold out, says Ford. Now this is a direct competitor to the Tesla Model Y and has the potential to be quite successful. And if you take a look at the vehicle, it is a pretty sexy looking car. So Ford could be a very interesting stock which you guys may want to check out. Now this is not financial advice, guys. I'm just giving you sort of information here for you guys to go off and do your own research into the company. And also be aware that market mood and market momentum is extremely difficult to predict and can actually change very rapidly. So that's just something to be aware of. And that's why I personally am more of a fundamental investor, more of a long-term investor. But I'm still very open to new ideas and new investing strategies. So if you guys did find some value in this video, be sure to give it a big thumbs up. That helps out tremendously with the channel. If you're new around here and you still haven't subscribed, feel free to join the investing family by hitting that subscribe button and turning that notification bell on. And if you do want to know in real time exactly which stocks I'm buying, which stocks I'm selling, and access my entire portfolio, and join a thriving community of some of the finest people on the internet, you can also talk to me directly about your own investing and investing decisions, then feel free to check out that first link in the description below for the VIP membership group. And with that being said, thank you guys so much for watching. I hope you have an incredible day, and I'll see you in my next video. Invest safe.